Hello everybody, welcome back to our CMA classes. I'm Soumya Santosh, a CMA finalist, and today we are going to start the revision of another chapter for CA finals, CMA finals today, and the chapter is going to be procedure for assessment. Okay, so let's start. First of all, we have to understand who are the SSC and which every individual have to file the return of income. Are they compulsory required to file the return of income? Is it going to be applied on every individual, HAF, company or any other person, or is there any requirement or is there any criteria for filing a return of income? So let's find out this in this chapter. Okay, so let me give a short description about this. Every taxpayer has to furnish the return of his income to the income tax department. These details are to be furnished by filing the return of income. Once the return of income is filed by the taxpayer, the next step is going to be processing the return of the income by the income tax department. The income tax department examine the return of income for the correctness. The process of examining the return of income by income tax department is called assessment. Okay, so now we get the meaning of assessment. What is going to be very first step? First of all, the individual is going to file the return, okay, to the department. Okay, then further processing is done, and whole this process is known as assessment. Okay, the assessment also include reassessment, best judgment under section 144, and various kind of assessment under this income tax of 1961 are discussed below. Types of assessment are self-assessment, summary assessment, regular assessment, scrutiny assessment, best judgment assessment, and reassessment, which is also known as income escaping assessment. So here we are going to start the chapter now. Okay, section 139. Okay, where the individual is going to file the return. Okay, so here which individual is going to file the return, we have to find out. Okay, whether there is some basic exemption, and what is that basic exemption criteria. If it exceeds, then the individual SSC is going to file the return or not. So let's find out now. Okay, as per section 139 subsection 1 of the Income Tax Act lay down the basics of filing late return for the taxpayer who misses the prescribed deadline. It follows an alternative to ratify the non-submission of ITR. The section has various subsections to cover different areas of late ITR filing. Before digging up deep into these subsection, we should understand mandatory return filing. The following entitles need to be filed their returns. Okay, so in section 139 we are going to read there are some return which we can definitely file late. There are some return which we can recorrect it. Okay, they are belated return. Okay, they are defective return, and so many things are there. Okay, so let's find out which entities are need to file the ITR. Okay, income tax return. Okay, every person, first of all, every person having total income exceeding the exemption limit. Okay, which means there is some basic exemption limit. If an individual, if a person cross that basic exemption, that case the person is required to file the return. Okay, firm including ULP, which is unlimited liability partnership, and LLP, which is limited liability partnership. Okay, which means first of all what I said, the individual, those individual we have crossed the basic exemption limit criteria. Okay, those people have to file the compulsory return. Is this clear? Yes. Second, firm, okay, which include ULP and LLP, unlimited liability partnership and limited liability partnership. So is there going to be apply for the public and private company? Let's find out. Any public, private, domestic, foreign entity doing business in India or located in India, they are compulsory required to file the return. Okay, and the resident with the asset outside India, or any entity retaining authority foreign account based outside India, which means ROR. Here we are talking about the ROR, resident but ordinary resident. Okay, not for the not ordinary resident. Okay, and I have also already covered the meaning of difference between these two. Okay, and next part says every BOI, AOP and HUF which is Hindu undivided family, body of individual is BOI, and artificial association of person is AOP, ठीक है, with income exceeding the prescribed exemption limit. So these are the people, ठीक है. So can I say this, just a second, these are the people we have to file the return compulsory. So can I say this on the basis of above which we have discussed, ठीक है, on the basis of these things, ठीक है, can we say the section as per section 139 subsection 1 filing of return of income, ठीक है, ROI which is filing of return of income is compulsory apply, is going to be applied for whom? For the company and partnership firm, ठीक है, including LLP, ULP, ठीक है, which means the company and the partnership have to file compulsory return, ठीक है ना. Second, for other SSC, if gross total income before claiming exemption under section 54, 54B, 54D, 54EC, 54F, 54G, 54GA, say it with me, there are few sections for apart from these, which means if for other SSC, the gross total income before claiming the exemption under these section 54, 54B, D, E, sorry, 54, 54B, D, E, C, F, G, G, A, ठीक है. So before claiming exemption under these section, if the gross total income exceeds the basic limit, which is 2,50,000, right? In that case, those SSC is going to be file return compulsory, ठीक है. So for company partnership including LLP, ULP, ठीक है, they have to file compulsory return. Apart from that, those SSC whose gross total income before claiming the exemption under section 54, 54B, D, E, C, F, G, G, ठीक है, exceed the basic limit, in that case they are going to file the return compulsory, ठीक है, and following person are compulsory required to file the return. So first point was clear, right? Let's go for the other part, ठीक है, which means the resident individual, right? If they are beneficial owner of the asset, including the financial asset which is located outside India, ठीक, again the resident individual, we are talking about the resident or ordinary resident, okay, they are having any asset or financial interest outside India, they have to file the return compulsory, or has signing authority in any account outside India, definitely these people have to file the return compulsory. Or beneficiary of any asset including financial interest outside India, okay, or person other than company and firm, okay. For this I have to read more point. So up to this, can I say for company and partnership compulsory return, right? For individual, for SSC before gross total income, ठीक है, before claiming that exemption under section 54, 54B, D, E, C, F, G, G, A, ठीक है, apart if before claiming the exemption under this section the basic exemption is exceeding the GTI is exceeding the basic exemption, ठीक है, that case they have to file the return, okay. For the person, the resident individual who is having the beneficial owner, who is the beneficial owner of the asset, okay, or the financial interest of the asset which is located outside India, okay, or the beneficiary of any asset including financial interest located outside India, okay. So these are the people who have to file compulsory return. So let's go for the other point, person other than company and firm. Let's find out what are they saying, ठीक है. For individual, okay, for individual, salaried individual with income exceeding the prescribed exemption limit of 5 lakh rupees, okay. If the salaried person, the income is more than 5 lakh, in that case they are required to file the return. For individual who earn less than 5 lakh, for 2 or more employees are also mandated to file an income tax return, which means any individual was having 5 lakh. What I told you in the first point in this for the individual, okay, what I told you in this case, if the individual having 5 lakh income, okay, in that case more than 5 lakh he is required to file the return compulsory. But what if he is having less than 5 lakh? No, but that individual is doing job under 2 different employees, ठीक है, employers, ठीक है, in that case that individual is required to file the return compulsory even though his income is less than 5 lakh, ठीक है, okay. an Indian resident owing asset outside India and beneficiary, as I told you, ठीक है, in the previous point, ठीक है, individual who have paid 1 lakh or more in the electricity bill payment in the previous financial year. Okay, if the electricity bill of an individual exceeds 1 lakh or more, 1 lakh or more, which means if it is 1 lakh or more, ठीक है, of electricity bill, ठीक है, in that case that person is definitely going to file the ITR, ठीक है, compulsory. So another point says the individual who have spent 2 lakh or more on themselves or other for the travel to the foreign country. So let's take an example. X and Y married, they are a married couple, went to honeymoon to the Switzerland, okay, and wife, which means Y, Mrs. Y, want to purchase a handbag which costs more than 2,50,000. Okay, so she have already purchased that handbag which is costing 2,50,000, which is more than 2 lakh. And what is our law saying? The law is saying if that individual spent 2 lakh or more than 2 lakh in other country, which means foreign country, in that case the individual is required to file the compulsory return. ठीक है, which individual? X, ठीक है, because his husband, hey, Y was not earning something, let's assume Y was not earning something, so husband's income was spent there, right? So if the individual who is spending more than 2 lakh or more on foreign country, those individual have to compulsory file the return. ठीक है. Next, aggregate amount exceeding 1 crore rupees in one or more current account maintained with bank or cooperating. So can I say for the current account, this, what is the exemption limit? 1 crore. Okay, 1 crore rupee in one or more current account. ठीक है. So in current account, if it exceeds 1 crore rupees, then definitely aggregate, I'm talking about the aggregate, okay? In that case, the person have to file the return compulsory. So is there any limit for saving account? Yes, saving account, the limit is going to be 50 lakh, okay? So let's read out. Total deposit in one or more saving account are 50 lakh. So what can I say for the current account? It's going to be what? 1 crore, and for the saving account it's going to be 50 lakh. Okay, hope so this part was clear to you. So let's go for the other point, which says if gross receipt from the profession exceeds 10 lakh in the previous financial year. So can I write it? Gross receipt, okay, from the profession, okay, exceeds 10 lakh rupees, not 50, okay, 10 lakh rupees in the previous financial year, okay, in that case also the person have to file the return compulsory. And one more point is remaining. If the tax collected in the last year was 25,000, okay, tax collected, which mean we are talking about the TDS and TCS here, ठीक है, if it exceeds 25,000 rupees, sorry, ठीक है, if it exceeds 25,000 rupees, in that case that individual have to file the return compulsory. So what about the senior citizen? Is there any limit? Yes, the limit is going to be 50,000 for the senior citizen, 25,000 is for the individual, okay, from TDS, TCS, and for the senior citizen is going to be 50,000. Okay, okay, so can I make it in short? For the salaried person, 5 lakh, okay, even if it's below 5 lakh, the person is doing job under more than one employer, ठीक है, means 2 or more, ठीक है, 1 or more, ठीक है, 1 नहीं, more than 1, ठीक है, in that case that person have to file compulsory return, ठीक है. What about the current, yes, and saving 1 crore 50 lakh, ठीक है. And what for the, is there any foreign country limit? Yes, that was of what? 2 lakh. And what about the electricity limit? Electricity bill of 1 lakh, ठीक है, yes. And for the TDS, TCS 25,000 for the individual, and for the senior citizen that's going to be 50,000. Hope so this part was clear. So let's go for the others. Okay, we were talking about the individual and now we are going to talk about the others. Okay, every company or firm, as we know, they have to file the return compulsory whether they earned profit or they are going under loss. Okay, every AOP, BOI, HUF, if their net income exceed the basic limit, okay, every, Okay, and every political party if the party income exceeds the basic limit. Okay, and association as defined under section 10 if their income exceed the exemption limit. Okay, and there is one more thing, these are the simple point. Okay, we know this. Okay, but if total sale, okay, total turnover, the gross receipt from the business exceeds 60 lakhs, in that case the person have to file the return compulsory. ठीक है, so can I say it? Can I rewind? Do you need we should rewind it again? Okay, let's do it again. ठीक है, okay, for the company and partnership firm, okay, they have to file the return compulsory. ठीक है, for those person, for the other SSC, if gross total income exceeds those basic exemption, ठीक है, before claiming the exemption under these sections, ठीक है, in that case they have to file the compulsory return. And for other people it's going to be like, first, if the person electricity bill exceeds 1 lakh, ठीक है, what about the foreign country, ठीक है, the expenses was of 2 lakh, ठीक है, and let's go for the person, the resident is having any asset outside India, in that case they have to file the compulsory return. Okay, so what about the TDS TCR 25,000, ठीक है, and senior citizen 50,000, ठीक है, current account was of 1 crore, ठीक है, saving 50 lakh, ठीक है, and there was one more point which says about the 10 lakh. Do you remember the gross receipt from the profession was of 10 lakh, and the same thing, the gross receipt from turnover gross receipt from the business was of 60 lakh. If this exceed this part, ठीक है, in that case the person have to file the return compulsory. ठीक है, hope so up to this everything was clear. Let's go for the other part, which is voluntary income tax return. Even if you don't come under the purview of mandatory income tax return, file for voluntary tax return, these are considered valid. Okay, so we have read these things, ठीक है, we can also file voluntary return even if we are not coming any of the basic exemption, we are not crossing the basic exemption, even though we can file the return voluntarily. Okay, so let's go for the due date. Okay, due dates or time for filing return of income, section 1391 subsection 1, where the SSC is required to furnish a return under section 92E. Okay, transfer price pertaining to the international or specified domestic transaction. The due date related to this international transaction or specified domestic transaction is going to be November 30. Okay, November 30 is going to be the last date. Okay, so the person have to file, the company have to file the return before 30th November. Okay, where a person has entered into international transaction or specified domestic transaction, aggregate to the amount exceed 5 crore rupees or 20 crore as the case may be. ठीक है, let's go for the other part, which says where the SSC is company, okay, not having international or the specified domestic transaction. Let me take the another pen. For the company, it's going to be the due date is going to be October 31st. Okay, where the person is SSC is a person other than company not having international specified domestic transaction. Okay, in company, let's go for, there are some more few points which we have to discuss, and they are, in case where the account of SSC is required to be audited. Okay, in case the SSC's account is required to be audited, in that case their due date is going to be 31st of October. ठीक है, where the SSC is working partner, ठीक है, working partner in a firm whose account are required to be audited under law, again the return due date is going to be 31st October. ठीक है, or in any other case it's going to be 31st of July. Okay, so these 2 points was related to this. Okay, so can I say due date, there are 3 due dates, 30th November, 31st of October, 31st of July. November in case of transfer pricing international transaction वाला, ठीक है, and 31st October company के लिए, ठीक है, and those who the SSC who are required to audit their account, ठीक है, they, for them also and for the working partner also, the due date is going to be 31st of October, ठीक है, but for the other remaining normal SSC like us, okay, we have to file the return before due date, and the due date is going to be 31st of July. ठीक है, so hope so up to this everything was clear. Let's go for the income tax return in cases of losses. ठीक है, section 1393. Okay, so can you tell me in case of loss, the SSC is required to file the return compulsory, okay, or they can file the return, okay, or even though they have not filed the return, they can carry forward the losses or they can set off the losses. So I'll tell you, in case of losses, the SSC is required to file the return compulsory, okay. If they have not filed the return, the losses cannot be carried forward. Okay, hope so this point was clear. But in some cases, I will tell you, in case of unabsorbed depreciation, okay, and house property losses, it could be carried forward even though return is not filed. Okay, even though return is not filed, these can be carried forward. Let's check out. In case of loss, okay, I have written this, okay, in case of which losses? Business losses under section 72 subsection 1, speculation losses, business losses under section 73 subsection 2, loss from specified business under section 73A subsection 2, loss under the head capital gain under section 74(1) subsection 1, loss from the activity of owning and maintaining race horses under section 74A subsection 3, okay. But let's find out what law is saying now. In case of losses, filing an income tax return allows you to carry forward loss of the previous year. As I said, if the loss return is not filed, it cannot be, the loss cannot be carried forward. Of which loss? The previous year loss cannot be carried forward to the next year. Okay. Okay. For individual, it is mandatory to file income tax return if there was a loss in the previous financial year. For companies and the firm, previous year losses can be offset against the gain in this year providing the return are filed within the due dates. However, if the losses are due to house property, okay, they can be carried forward even though in the case of filing delayed return. If the loss is offset against income carried of the financial year, the return can be claimed even if filed after the due date. Okay, so hope so this was cleared. Okay, what if as per CBDT there is some return? Okay, let me read it again. Okay, as per CBDT circular, cost can be carried forward even if return of income filed after due date and delay in filing of return. Okay, in case of some genuineness, okay, you can simply request the department, okay, ki due to some emergency work or some mishappening and all, the loss return was not filed on or before due date. Okay, but is there any monetary limit? Yes, there is some monetary limit in case of return losses. Let's go for up to this return losses we have to file which authority. They are different in authority, they are different people, right, like CIT, PCIT, CCIT and all. Okay, so up to which limit we have to go for which authority. Okay, so let's check up to 50 lakh return losses. Okay, the application is sent to CIT and PCIT. Up to from 50 lakh to 2 crore we have to go to CCIT. Let me say it again. If the return loss is up to 50 lakh, the application is sent to which authority? CIT, PCIT. Okay, from 50 lakh to 2 crore CCIT and 2 crore to 3 crore PCCIT. And if it exceeds 3 crore, the return loss of return exceeds 3 crore in that case CBDT. Okay, the application is sent to CBDT in this case. Okay, let's find out another thing. Condemnation application can be made within 6 years from the end of assessment year. Income tax authority will dispose application within 6 months from the end of which application is received. Okay, so within 6 months from the end of that month when application was received, the income tax authority have to dispose the application. Hope so up to this everything is clear. Okay, let's go for some belated return. Section 139 subsection 4, okay, which means, and can an individual can file late return? Is there any time limit where the individual SSC can go for filing late return? Okay, let's go for it. If you miss the due date for filing the income tax return, you can still do so before December 31st of the assessment year. If you miss this deadline, then you will have to file a condonation of delay request to the tax authority. You might be charged a penalty of ₹5,000. However, if a reason for the delay is valid and satisfied, the officer in charge penalty may be waived off in that case. Okay. So the time limit is going to be before 3 months prior to the end of relevant assessment year or before completion of the assessment, before completion of the assessment or 3 months before the end of relevant assessment year. Belated return can be filed earlier among them. Can I say it again? Let me say it again. Okay, before 3 months from prior to the end of relevant assessment, prior to the end of relevant assessment or before completion of the assessment, okay, whichever is earlier, the belated return can be filed. Okay, hope so this part was also clear. There are some consequences of delay filing of income tax return. Let's go for it. Okay, below are the consequences of delay in filing return of income tax return. Penalty of rupees 5,000, as I said, 5,000 if the total income is more than 5 lakh. Okay, if the total income is more than 5 lakh, in that case 5,000 would be penalty imposition, and if it is between 2 lakh 50 to 5, in that case 10,000 would be the penalty. Interest of 1% per month in case of delay is going to be imposed. Okay, and no carry forward of specified loss, definitely under section 80 is going to be happen. No deduction in certain income under chapter 6A and 10AA. Interest on refund under 244A calculation from the date of filing of return of income. Acha, do you remember 244A where the interest of refund was granted, okay, was given, okay? But in this case, if the return was not filed on the time, in that case what is going to be happen, calculation from the date, the interest calculation, the refund of interest calculation from the date of filing of return and not from the 1st April of assessment is going to be happen. Usually what happened under section 244A, in case of refund of interest, okay, refund the date is going to be calculated from 1st of April, and if it is not filed on due date or before due date, in that case the date in which return was filed, okay, the calculation of interest refund is going to be calculated from that date on which the return was actually filed, not from 1st of April. Okay, so these are the consequences of delay in filing of income tax return. So let's go for section 139 subsection 5 of revision of return, revised return. So is it going to be possible a person, an individual can revise the return? Yes, they can revise the return, but for revising the return one should definitely file the return, okay, on or before the due date. Okay, once you have filed the return, you can multiple time you can revise the return, okay, again and again, again and again, again and again. Okay, so let's read out. There is a provision to revise any omission or wrong statement in the file of ITR. Okay, if the income tax department find mistake in the ITR, it will issue you notice and ask for the revised ITR. Your refund won't be processed until a revised ITR is filed. In case you have already filed a return and need not to revise your return, there is time limit prescribed for the same in every cycle. There is no time limit, number of time you can file a revised return. So as I told you, you can revise your return for the multiple time, okay, but there is some limit before the 3 months from the prior of relevant assessment year, okay, before, okay, 3 months, okay, or where before completion of, let me write before ka shortcut, before, okay, completion of assessment, whichever is earlier. Okay, an individual, an SSC can definitely revise their return, but for this they have to file their return on or before due date. Once the person have filed their return on or before the due date, in that case they can multiple time revise their return, okay, but there is some limit, right, before 3 months prior relevant assessment year, okay, or assessment of completion of the assessment, okay, whichever is earlier, okay, up to that time limit the individual can revise their limit. Hope so up to this was everything clear. Let's go for defective return under section 1399. Okay, what happens if the income tax department find any of the defect in return of any person? In that case they will send a notice, okay, they will intimate the individual SSC in that case, and the SSC have to make the intimation, the defect which was actually occurred, they have to make it clear, and within next 15 days they have to file the return. ठीक है. Okay, so let's go and find out what the law is saying here. The filed income tax return is considered defective unless the following conditions are met. The result return is accompanied by the computation of the payable tax. All the column excesses etc. are duly filed under each head: income, gross income and the total income. Return is accompanied by the proof of tax deducted at source or advance tax if any claim to be have paid. If the account they pay are audited, then copy of audited report is carried. If regular accounts are maintained, then copies of, ठीक है, manufacturing account, trading account, profit loss account and other accounts such other income and expenses account, balance sheet etc. ठीक है. So in simple, can I say, if any of the defect is happened, in that case in next 15 days it should be corrected. Okay, so this is what defective return is saying under section 139 subsection 9. Okay, so for the revision of return 139 subsection 5, loss 139 subsection 3. ठीक है. Let's go for the permanent account number 139A. Quoting of permanent account number has been mandatory by the IT department in many instances, and they are if his, which means SSC, if SSC's total income or total income of any other person in respect of which he is assessable under this act during any previous year exceed the maximum amount which is not chargeable to income tax. If the SSC's total income is exceeding the basic limit, ठीक है, so they have to file this, they have to quote the PAN number on or before the 31st May of the assessment year in which income is assessable. Okay, so 31st May was the time limit. Let's go for the other. If any SSC is carrying on any business or any profession whose total sale, turnover, gross receipt all likely to exceed 5 lakh in the financial year, so on or before the end of that financial year they have to quote the PAN number. Okay, so in case of business or the professional gross receipt, sales, turnover, ठीक है, they are exceeding more than 5 lakh. ठीक है, in that case on or before the end of financial year the PAN number should be quoted. ठीक है. Let's go for the third point. If the SSC is required to furnish a return of income under section 139 subsection 4A, ठीक है, comment below which is there, I'll say it definitely, but you have to comment below. ठीक है, 139 subsection 4A is a return of trust and charitable institution. ठीक है. If he is required to furnish a return in income under section 139 4A, in that case they are required to quote the PAN number on or before the end of relevant assessment year. Same thing is written in the point second and point third. Let's go for the fourth. In case of person who is entitled to receive any sum or income or amount on which tax is deductible under chapter which, yes, related to the TDS any financial year, in this case again they have to file the quote the PAN number on or before the end of financial year. ठीक है, hope so this point was clear. ठीक है, they are saying the 17B here, let me write here. ठीक है, so in case of business and profession, ठीक, total turnover, sales, gross receipt exceeds more than 5 lakh. Okay, second point was 139(4) charitable वाला. ठीक है, third point was 17B वाला. ठीक है, who is in this person who is required to receive any sum or income or amount on which the tax is deductible under chapter this point 17B वाला. ठीक है, in these three point the PAN number is to be quoted on or before the end of relevant financial year. End of relevant financial year, end of that financial year. Hope so this point was clear. So let's go for the last point. If he is a person who is not required to apply for PAN under any of the above clauses, application be made at any time. Okay, so these are the time limit where the submission application for allotment is to be done. ठीक है, before this time limit. So first was the total amount, total income exceed, ठीक है, basic limit 31st May of the assessment, ठीक है, is going to be the time limit for making the application for quoting the PAN number. Second business वाला, ठीक है, 17B वाला and trust वाला, charitable trust वाला before and of relevant assessment year. Last, if they are not required to furnish the PAN, they can make application anytime. Okay, let's go for some of the PAN where the quoting of PAN in some specified transaction where, okay, I'm not going in depth here. Okay, sale or purchase of motor vehicle or vehicle of other than the two-wheeled vehicle, which means 4 vehicle or even 3 vehicle, auto bina. Okay, opening an account other than the time deposit with the bank, company or cooperative bank, banking company or cooperative bank. So opening an account, the PAN number is definitely we have to quote the PAN number. Okay, making a payment of 2.5 lakh or more than a single transaction of goods or services, making a payment of 1 lakh or more in single transaction for the traveling expenses. Okay, for goods and services, how much? 2.5 was the limit, and for normal travel transaction expenses going to be 1 lakh. Making payment 50,000 for hotel bill. Okay, making payment 10,000 for the jewelry. Making payment of 5,000 single transaction for cash withdrawal from the bank. Okay, so quoting a PAN while filing an income tax return. Okay, this is definitely, we know this, filing income tax return we need PAN number. Okay, quoting PAN while submitting the documents to the income tax department. Okay, quote PAN while making the investment. Now let's go for some of the importance of PAN, quoting of PAN, which means prevention of tax evasion. Okay, it help in enhance financial transparency, it help in verification of our identity. Okay, and streamlining tax administration. It helps in these things. There are some exception, which means there are few exception to the requirement of obtaining PAN. The following individual entities are not required to apply for the PAN. Non-resident individual, okay, definitely we know this. Individual whose income is exempt under Income Tax Act. Okay, apart from non-resident, there are few more other people who are not required to apply for PAN or need not to quote the PAN number. Okay, so they are non-resident individual, definitely they have some other identity number, right, other than PAN number. As we have PAN number, they'll have some other identity number. Okay, and those, the person who are whose income is exempt under Income Tax Act. Okay, central and state government department, except where they engage in financial transaction. So central and for the central and state government department, the exemption is for them also. Consular offices of the foreign countries and specified institutions such as RBI, CMA, etc. For them, they are the exception to required of obtaining a PAN. Okay, so they are not obliged to apply for the PAN. Who are the people? The non-resident India, okay, and the individual whose income is exempt under Income Tax, okay, Income Tax Act, and for those central department and SEBI and Reserve Bank of India and some of the consular offices of foreign countries. Let's go for the last section of this lecture. Aadhaar number to be intimated by every person who have been allotted PAN. So every person who have been allotted permanent account number on 1st date of July 2017, which according to the provision of subsection 139AA is required to intimate his Aadhaar number, and he shall intimate his Aadhaar number to the Principal Director General of the Income Tax or Director General of the Income Tax or the person authorized by the said. And what are the consequences? Rejection of the application, imposition of the penalties, difficulties in financial transaction and increased scrutiny. And this is going to be the last point, Aadhaar number. Okay, quoting of Aadhaar number under section 139AA. Okay, it was introduced in Income Tax 1961 with the effect of 1st July 2017 to make mandatory for the individual to quote their Aadhaar number for the various purpose related to the income tax, which means enhance taxpayer compliance and curb tax evasion by linking Aadhaar with PAN, permanent account number, a unique identification number assigned to the taxpayer in India. Okay, they are the streamline and the administration of income tax, which gives easy verification of taxpayer by identifying and linking the various financial transaction. There are some category of person who are eligible to quote the Aadhaar number. Okay, the individual who is eligible to obtain Aadhaar number is required to quote the Aadhaar number in the following situation while filing an income tax return. This we know well, as the PAN number and Aadhaar number. We need these things when we are filing the income tax return. Okay, when apply for the new PAN or making change in the existing PAN, even then also we need Aadhaar number, as Aadhaar and PAN are interlinked, right? We know this. We have to interlink a PAN number and Aadhaar number. Okay, to be eligible to obtain Aadhaar number, individual must be a resident in India. This means that the individual must be residing in India for at least 182 days, right? If a person is residing in India for 182 days or more, in that case they would be resident in India, right, for the preceding previous year. So let's go for the category B, eligible person to intimate Aadhaar number. Section 139AA subsection 2 of the Income Tax 1961 mandate that every person who has been allotted a permanent account number as on July 1st 2017 eligible to obtain Aadhaar number shall intimate the Aadhaar number to the Income Tax Department. This means the individual who have already been assigned PAN number before 1st July 2017 also required to link the Aadhaar with PAN. As I said, those person who were having PAN number earlier than 1st of July 2017, okay, if it is not linked, in that case PAN would not be, yes, okay, the person PAN would not be, if the person PAN is not linked to the Aadhaar number, in that case the transaction would not be valid. Okay, let's go for some of the consequences of non-compliance: invalidation of PAN, okay, and penalty of 10,000 and may be imposed for each instance of the non-compliance. So invalidation of PAN, these are the first compliance, which means the PAN of the non-complying individual may be deemed invalid, okay, which would hinder the ability to participate in various financial and tax related transactions, and penalty of 10,000 is going to be imposed. There is some exception of quoting of Aadhaar card, as there was some of the people need not to file PAN number, right? Same thing is going to apply for definitely non-resident individual, minors and person with disabilities. Okay, so can I say the residing in state of Assam, Jammu and Kashmir and Meghalaya, they are one of the exception, okay, for Aadhaar card, quoting Aadhaar card. For the non-resident as per Income Tax 1961, and for a person whose age is of 80 years or more than any time during the previous year, or not a citizen of India. Okay, so can I say the person who is a resident of Jammu Kashmir, okay, Jammu Kashmir, Meghalaya and Assam, they are one of the exception, non-resident. Other person not a citizen of India, okay, and one more, the person have crossed the age of 80 years during any previous year, they are not required to quote the Aadhaar number. Okay, individuals who are exempt from obtaining Aadhaar number under the Aadhaar Targeted Delivery of Financial and Other Subsidy Benefit or Services Act 2016, any other application law are not required to quote the Aadhaar number under section 139AA. Okay, so they are the exception, and up to this, I don't want to make this video very large video, huge video, so that till this you have to do the revision. I'll come with the continuation of this video, and I want to say one more thing. We hit 100 subscriber. Thank you so much everybody. For now we are 100 members. Okay, so I didn't expect that in very little time, in very less time we grow very much, I guess, and I want to thank you all for this. I mean, I wasn't expecting that in last 2.5 months, yes, last 2.5 months we're going to hit 100 subscribers. So this wasn't expected by me. So thank you for this, and I'm expecting that you all are going to help me. You are going to support me in this, okay? And nothing else, do your revision, guys. Till then I'll come with more videos, and I'll come with the continuation of this video, okay? And do your revision, give your best, that's it. This is Soumya Santosh, Toodles, guys.